Welcome everyone to this, the first day of spring. I've been looking forward to welcoming you all to a deep dive in our latest family office deal study, and not least the characteristics or the findings on Denmark. I'm Karina Heilesen, tax partner here in PwC Denmark, and also have the pleasure of being the family business leader of EMEA and PwC Denmark. In recent years, PwC have been focusing on developing deeper insight into investments and deals performed by family office. And lately, we've actually refined our focus to have a more thorough knowledge on investment in 3 asset classes: real estate, startup, and direct investment. And as you'll hear later today, also from my colleague Johannes joining from PwC EMEA, we are seeing that family office globally are performing a more and more important role. And actually Denmark also have a large part of that within Europe. And we will deep dive into some of the characteristics of the Danish deals and investments done since last time. But we'll get back to that. Before we deep dive into that and zoom in on Denmark, let's just have a small look into the global landscape of family offices. Because in PwC, we have actually been researching on family offices within more than a decade. And we have built a database, which we are very proud of because it gives us a unique knowledge and insight, consisting of more than 8,270 family offices. And the majority of those family offices are within North and Latin America, followed by Asia Pacific and Europe, and then with a smaller concentration in Middle East and Africa. Yes, within Denmark, we actually have 81 family offices in our database. And because we have this huge database with knowledge, we can also see that the median of assets under management is in Denmark 1.2 billion, and that's actually more than in our fellow countries within Europe with the 985 million US dollars, and also more within Americas with the 1.1 million US dollars. So Denmark is actually playing a big role on the family office sides and investments done, and we actually have more money within the Danish family offices to invest. Our database also shows that the family office with the largest median of assets under management to invest is Asia Pacific with 1.5 million. But we also know that more than 50% of the family offices actually have around 1.1 billion US dollars to invest. So family offices are, as I said previously, playing an increasingly important role when it comes to investments in within different asset classes. And as I said, we are very proud of our database, and of course we are especially proud because it gives us a unique insight into the global landscape of family offices, but also on a regional and country by country vision. So we will get back to the Danish findings later, just shortly. But before we do that, maybe it would be a good idea just to demystify the family offices and just have a small talk around what we mean when we define family offices. Because the saying goes, if you've seen one family office, you've actually only seen one, because the variations of family offices is so huge. But historically, the academics at least have been dividing family offices into 4 categories. We have the single family offices, which is one family office. We have the multi-family offices, family offices professionally run with more than one family. Then we have the embedded family offices, where the family office is actually a part of the family business. And then we have the virtual family offices, which is a family office that don't have a physical office, but have advisors, independent advisors on the team, and those advisors work together independently but remotely, so not from the same office. And the variation of family offices, as I mentioned in the beginning, very huge. So you will hear different kind of family offices that's been established throughout the time period, like investment offices. Many countries use funds as well. It's not that common in Denmark as a family office. We have the holdings, and we also have venture arms, because a lot of the family offices, they are established on a wealth that an entrepreneur have built up through time, and they want to hang on to that entrepreneurial investment method. Our database of family offices also show that more than 80% of the family office's wealth actually is connected with a family business, an ongoing family business. So it's a common misunderstanding that family offices are often established after a cash event. It's actually only 20% of family offices within our global database that has been established due to a cash event. What we also see is that many, or more than 75% of the family offices are actually owned by the family business owners, and only 5% are owned by their heirs. So we know that we have a huge amount of succession planning to do, but I won't go deeper into that today. Further, we can see that more than 75% of the family offices within our database of more than 8,270 family offices have been built or established since 1990. So it is a fairly new concept. It's young entities. And in Denmark, it's even a younger concept than that, because, of course, we had some in the 1990s, but many of those have been established since 2010. But enough about the family office, etc. We just wanted to give you a highlight of how we define family offices, so you understand that what we include in our global database when we do these family office deal studies. Because the database, it includes all the different kinds of family office, where there is one characteristic, and that is that it's the family wealth that is used to invest in the investment market. But again, enough from me for now. I will now hand over the word to my colleague, Johannes from the EMEA network. Johannes, please introduce yourself and take over from here.
Will do so. Yeah, thanks very much, Karina. This is a very special honor for me to be invited here to your webcast. Yeah, as Karina said, I'm Johannes Rettig, Director in PwC's Family Business Team. As EMEA Family Office and Deals Leader, I support our practice worldwide and especially in Europe with regard to family offices, their investment strategies, and the transactions they undertake. In response to requests from our colleagues in PwC's Deals teams, we've been focusing in recent years on developing deeper insights into investments and deals conducted by family offices. So lately, we've refined our focus to explore family office investments in 3 key asset classes, as Karina already said: startups, real estate, and mergers and acquisitions, or direct investments. As you'll hear today, family offices are increasingly important players globally in the investment markets, as a balance that they strike between these different asset classes continues to shift and evolve. And within this global landscape, family offices in Denmark exhibit some very interesting and distinctive characteristics in terms of their deal flow and focus. I'll now take you through the main findings from our latest global family office and deal study. However, I do urge you to take the time to read the report in full, since it provides the most accurate and detailed picture available anywhere of how family wealth is being invested across the world. Our most striking top-line finding is a sharp global decline since 2021 in both the volume and value of family office investments. Here you can see the number and aggregate value of investments by family offices globally in each year over the past decade. What shines through is that with the sole exception of 2020, when the COVID-19 pandemic was at its height, deal activity rose steadily throughout the 8 years to 2021, when both volume and value surged to a peak. But this spike was short-lived, with both the volume and value of deals falling back significantly in 2022, and the decline then accelerating in 2023. The effect is that both the volume and value of deals last year fell below the relatively low levels recorded in 2020. Even more remarkably, the total volume of deals in 2023 was below the previous all-time low registered back in 2014. In combination with the changes in the volume and value of deals, we are also seeing shifts between the asset classes family offices are investing in, with the deal volume globally moving away from real estate and towards startups. Our research confirms that this change of focus is a long-term trend. Up to 2016, family offices worldwide invested most frequently in real estate. But after a brief period of equilibrium in 2017, we can see that from 2018 onwards, the balance moved strongly towards investments in startups, where it has stayed ever since, including during the overall decline in deal numbers over the past 2 years. Meanwhile, the proportion of family offices deals going into mergers and acquisitions has been edging upwards since 2016, with the sole exception of a brief dip in 2021. Last year, the proportion of deals in the M&A category reached a new high for the decade at 10%. So let me go to the next slide. Here you can see, having looked at deal volume, let's see where's the money actually goes. And while startup investments now dominate family offices deals by volume, the story seems to be repeating itself here too, albeit with a time lag. Until 2019, family offices have consistently invested most of their money in real estate. However, in 2020, real estate investments began to lose ground. And since then, startups have displaced real estate as the biggest recipient of investment from family offices. So those are the main trends we are seeing in family office investments at a global level. For more detail, please see our full analysis, but what's happening in Denmark and what are the implications for the future? Drawing on our findings, here's our perspective. This chart shows both the volume and value of family office investments in Denmark over the past decade. As you can see, when you compare these figures with the global trends we looked at a few moments ago, there are both significant similarities and also some differences. First, the similarities. As at a global level, family office investments in Denmark rose to a peak in 2021 in volume and value before falling sharply in 2022. Deal volume then continued to fall in 2023. As a result, the number of investments by family offices in Denmark has fallen by over 40% since its all-time high in 2021. It's even below its level in 2020 at the start of the COVID-19 pandemic. However, the picture on deal value is quite different. This also reached a peak in 2021, the highest total deal value since 2015, and then fall back by more than a third in 2022. But in 2023, deal value actually increased by 1%, bucking the global trend and giving early signs of a possible turnaround. Let me go to the next slide now. Turning to asset class. Recent years have seen a significant shift in investment focus among Danish family offices. Up to 2000, they invested most frequently in property. But starting from 2019, they switched to investing more often in startups, an asset class that has now accounted for more than half of their deals in each of the past 5 years. However, despite their rising proportion of startups deals by volume, most of their capital is currently flowing into real estate, which accounted for 68% of total deal value in 2023. The same year saw their proportion of property deals almost double to 41%. Looking back over the past decade, property has accounted for the majority of their investments by value in most years, peaking at 82% in 2017. Danish family offices increased focus on startups in recent years is reflected in the relatively large proportion of total investment that they contribute to the startup sector. Family offices' share of the capital invested in Danish startups reached a decade high of 35% in 2001 before slipping back to 33% in 2020 and 28% in 2023. The average share across the decade is just under 22%, meaning about 1 in 5 startups in Denmark has received capital support from family offices in the past 10 years. Meanwhile, the proportion of real estate investments involving family offices over the decade averages just under 7%. This correlates to every 14th property transaction in Denmark being supported by family office. So next slide. Turning to the size of deals conducted by family offices in Denmark, their deal flow over the past decade has generally been dominated by smaller and medium-sized deals with value below $100 million. But they are also now increasingly involved in large deals between $100 and $500 million. These accounted for almost 1 in 5 of their investments in 2023. A further change in recent years has been a slight shift away from small deals below $25 million and towards medium-sized ones between 25 and 100 million. Small transactions accounted for 3/4 of family office deals in Denmark in 2020, but little more than half of their total deal volume in each of the 3 years since then. And over 1/4 of family office investments in 2023 were medium-sized deals. So, as well as looking at deal volume, value, and asset class, our analysis also tracks the proportion of club deals, where family offices co-invest and share risk jointly with other investors, as opposed to sole deals where they invest alone. Here it's interesting to note that the share of club deals in family offices' overall deal volume fell significantly in 2023, with only half of their transaction being carried out jointly, down from 61% in 2020. In 2022, club deals recorded the same all-time high share of 61% at the start of the coronavirus pandemic. Looking back over the decade, club deals surged in popularity in 2018, since when they've consistently accounted for at least half of deals, dipping below that level only once in 2021. The implication is that family offices in Denmark are keen to share risk by investing alongside others. However, with sole deals still accounting for half of all their deals in 2023, it's clear they are also ready and willing to act opportunistically. So when the right investment opportunity arises, they're happy to take it on their own. So in this chart, we've broken down family office investments between outbound cross-border investments in other markets made by family office located in Denmark, domestic in-country investments within Denmark by Danish family offices, and inbound investments into Denmark by family office based elsewhere. What stands out here is that in 2023, inbound investments by foreign family offices in Denmark recorded by far their highest share in the past decade, exceeding 50% for the first time. By contrast, outbound deals by Danish family offices investing in other markets globally slumped by more than half to 15%, the lowest since 2015, when the same figure was recorded. Meanwhile, the share of domestic deals by Danish family offices has remained steady at 33% for the past 3 years. So, over the next 3 slides, I call out the main trends in family office investments in Denmark in the 3 key asset classes of startups, real estate, and M&A deals. First, startups. In terms of the leading sectors that family offices in Denmark have favored when investing in startups over the past 5 years, they've invested most frequently in software as a service startups, followed by clean tech and then technology, media and telecommunications, TMT, artificial intelligence and machine learning, and mobile. This ranking represents a shift from the preceding 5-year period up to 2018, when TMT startups dominated family offices startup deal flow. This underlines how strongly software as a service has come strongly to the force since 2019. However, in terms of deal value, fintech startups have attracted the most capital from family offices in Denmark in the past 5 years, followed by those in the TMT and mobile sectors. So, turning to real estate investments by family offices in Denmark over the past 5 years, our database shows they've invested most frequently in office property. In fact, since 2019, they've made as many investments in office real estate as in apartment, retail, and industrial property combined. The 24 investments in office real estate by Danish family offices in the past 5-year period is the same number as in the previous 5 years up to 2018. However, the value of those office investments has more than trebled to over $1.8 billion. That's more than 3 times as much they've invested in industrial property in second place. And finally, drilling down into family office M&A transactions in Denmark over the past 5 years, we find that computer software companies dominate their M&A deal flow in terms of volume, followed by service companies and then internet e-commerce, leisure and industrial electronics. In fact, since 2019, computer software has accounted for more M&A deals by family office in Denmark than the next 3 sectors put together. Given this, it's hardly surprising that computer software has also claimed the largest share of family office capital invested in M&A deals ahead of industrial electronics. Conversely, the proportion of family office capital invested in financial services M&A transactions has collapsed in the past 5 years. So that's my whistle-stop tour of our latest analysis of family office investments, both globally and in Denmark. Thanks for listening, and I hope you found it interesting and informative. And I look forward to responding to any questions you may have. Now over to you, Katrina.
Thank you very much, Johannes. I actually get extremely proud that the Danish Family Office are so active, have kept their entrepreneurial mindset, and also follow the trends of what we see in general has made Denmark stand out when you do investments. So, but for now, I would have loved if there were questions. There hasn't come in any questions as we are speaking, but you are more than welcome to reach out to either Johannes or me. You have our contact details here on the last slide. And we hope you enjoyed it. We hope you found it useful, the insight that we were able to share with you. And we look forward to have similar webinars and meetings with you going forward. Thank you very much, everyone, for participating, and have a lovely first spring day.